aviation insurance has skyrocketed, and the industry warns the economic impact will spread beyond insurance and beyond the Middle East. Reid Sawyer heads up the Emerging Risks Group at Marsh McLennan, a 22-year veteran of the U.S. Army. He was a senior intelligence strategist for the Middle East for U.S. Central Command. So, Reid, you're coming at this with, I think, perspective that is badly needed right now. Can you give me a sense, first of all, of what you're seeing as the biggest threat as we speak, not knowing what Israel's next move is going to be?
Yeah, it's great to be with you, Contessa and Tyler. I think the biggest threat that we see here is that organizations overwhelmingly are struggling and in some cases underestimating geopolitical risk, right? That this fact that they're struggling to understand what it means, how it can impact them, and what those follow-on effects are to them, and how that can challenge their strategy really is creating a lot of uncertainty and volatility in the environment as we think forward. So really it's this idea about do we have the right lens to evaluate what's happening in front of us?
We're showing the big global reinsurers right now, and of course they may be bracing for impact more than the primary carriers because the primary carriers have limits on their exposure before the reinsurance kicks in. Your advice, I assume, would be different from those who have business in the Middle East that might be directly exposed, and more broadly, those with global business.
Yeah, certainly. Right. If you were directly exposed in the Middle East right now, this is all about what are your tactical actions? How are you hedging your increased cost? And what is it about business continuity? And how are you activating those business continuity plans to drive resiliency? When you step away from those that are maybe perhaps not immediately on the ground in the Middle East, but because there's so much dependency with that part of the world, right, it's a different set of questions we really need to be asking ourselves, Contessa.
Okay, and then for global businesses, you say there's three dimensions you want to look at the particular risks, starting with supply chain.
Yeah, I mean, this becomes the most obvious aside from the energy impacts that we're seeing and the concern that we have over that. I mean, just think about what's happening in the Red Sea alone with the proxy force of the Houthi that's been attacking the, almost 40 plus ships in the Red Sea, where we see almost 20% of global container ships moving through that volume. But we've then, because of these attacks, we've been witnessing almost a 30% increase in transit time, which means that the direct cost to shippers and to goods is increasing from that perspective. But even as we think about what are the longer term impacts about this, the OECD is estimating that if this continues over time, we may see a 0.4% increase in CPI for OECD countries, right? So let alone if this war spreads and moves beyond that. So the supply chain, Contessa, is the obvious dimensions of, but I think we need to be tracing what those longer term and broader impacts are to our organizations.
A couple of quick questions. You mentioned the delays associated with having to transit South Africa or however you have to go. Are those delays and the costs associated with them, are those insurable?
In some instances, they can be, and it depends on how an insured has their policy structured. But again, these are the pieces, Tyler, that organizations may need to be thinking forward about these risks. Much harder once we're in the middle of a crisis than to be saying, how can I insure and lay this risk off to the insurance markets?
And then question two, I get the risk from business interruption. I get the risk to shipping. I'm a little, we mentioned in the introduction that premiums on aviation insurance are higher. There has not been, I remember when Russia shot down an airliner not long ago, I believe over Ukraine. But why would aviation risk be higher today?
I think this is just talking about the broader availability of capital in the market, not necessarily tying to this individual issue, Tyler, from that perspective, but just the broader challenges that we see in the markets from that perspective.